Morning, everyone. Welcome to MPC Markets morning call, 31st of July, 2025. Strap yourselves in, people. This one's going to be a long one. There's so much that's gone on overnight. We've had the Federal Reserve meet, leave rates on hold. We've had, which I'm sure there'll be some retaliation from Trump at some stage on that one, and probably a little bit more hawkish than the market was expecting. Maybe only one rate cut this year. They were pricing in three just a month ago, basically. We also had a huge night of earnings. I'm just going to cover Microsoft and Meta because they're the big show, basically. Absolutely knocked it out of the park. These two guys are they're two of my favoured leaders in AI overall. And, you know, big kudos to Microsoft. It's always been the sort of the slow to react and you know, the fairly somber giant. And it's gone aggressive as hell at AI, and it's definitely paying off. And then we also had tariff announcements as well. Trump inked the 50% copper tariff. It was some watered down stuff. So, and that caused some really sharp movements, a massive move in copper. There's also some trade deals from India. So, look, if that's the intro, you can kind of get a bit of an idea of how much we've got to cover here this morning. So, I'm going to start with commodities because it's just easier to sort of get this out of the way with the trade deals and what's going on. So Trump signed off on the 50% copper tariffs, but it was really watered down. So this is just copper concentrate prices, basically. But a down 20% move in copper is enormous. It was sitting at record highs, but we sort of, you know, we've gone back to almost basically the buy zone or the bottom of the range here in the last 12 months in less than an hour. And overall, I think that's just the market mispricing. I mean, for the Australian miners, I don't think it's as big a deal as what. I mean, everyone's going to make a massive deal about it today. It'll be very Chicken Little, the sky's falling, you know, copper. But this is very likely an extraordinary opportunity to be buying copper overall, given what's happening in the next couple of years with, I mean, wiring AI, power grids, etc., etc. So yeah, short-term volatility can sometimes provide some of the best opportunities, but essentially it's really targeted at the refined products overall, or the finished products and refining. So I'll get into that into a little bit more detail. Just broadly, with the Fed holding rates overnight and being a little bit more hawkish, and for those of you who don't know what hawkish means, less inclined to cut rates is hawkish. Dovish means they're more inclined to cut rates, but they were hawkish overnight. That strengthened the US dollar up around about a 1%. I think it's up about 4% for the last sort of month or so, and nearly back above 100 in the dollar index. So broadly, that's not good for commodity prices because everything's priced in US dollars. So we saw gold off 1.6, silver off 3. Platinum was off 7, but super volatile with platinum. Crude was up a little bit. Iron ore down a small amount. Lithium's been very wild, but everything else sort of largely just drifting off. But obviously copper and platinum, the big ones there. And that's a combination of that US dollar strength and obviously with copper, the announcement. So I'm going to explain to you, and I can't believe I'm about to say this out loud, why I think Trump's copper policy is actually good policy. And look, there is some diamonds in the rough here for Trump. The way he announces things, and he's very erratic, and the way he just rambles on is very off-putting. But there is some method in a lot of the madness that's going on. It's just, you know, I think everyone globally would just be happier if he just didn't carry on so much. But look, the US copper gap here. So the US is actually copper independent. They don't need to import copper. They're actually a net exporter. So, but what has sort of happened over the course of globalization, and it's happened with consumer electronics, etc. It's happened with a whole bunch of things. Essentially, the innovation happens in the US, say with tech, for instance, and then they outsource it to China, India, and that's what's causing all these trade deficits. He's trying to pull these back. With low-hanging fruit like the copper gap, they're essentially mining it in America, paying to ship it offshore to be refined and or finished, and then bring it back in. And I mean, that's just laziness or stupidity, really. And given what we're going to see I'm a massive believer in the thematic of the rapid expansion of these AI data centers, and the Microsoft and Meta results from tonight only just make me want to double down on that. This is actually really low-hanging fruit, smart policy from Trump, because making these companies just onshore their refining and finishing in a commodity that is going to have pretty much a decade to 2 decade long expansion, and probably a 5 year rapid expansion in building out those AI data centers and having to redo all the grids, and then eventually, obviously, we'll sort of head back towards that more renewable energy as time goes on. The grids have to be rewired for renewables. They may have to be rewired for some of the nuclear power, which they're pushing towards. So he's actually thinking relatively long term. Whether it's an accident or not, I don't know. I mean, the 50% to me looked like it was made up on the spot, but I think this policy is better than a blanket policy. Look, sorry if you're long copper. We hold BHP. We're happy to hold that long term. We recently exited Wire ETF, I think about 3 days ago, because if you think about on the broader scope of things, Trump always starts all the trade deals. It's been 40, 50%, settles back at about 15. So Blind Freddie could have told you that this policy was going to be watered down. But, as I say, he cops a lot of criticism, but in his defense, I think this is actually quality policy that will end up making the copper companies, the US-based copper companies, a lot of money over the coming decades. So, not that, I'm sure there'll be on socials today, there'll be a lot of people whinging about it, but I think this is probably I think it's providing, if you haven't got any on, it's providing a really decent buying opportunity, because that, as I said, based on those results of Microsoft and Meta last night, which were just outstanding and saw the stocks rally up to 10% in the aftermarket, and we're talking about multi-trillion-dollar companies here. So being up 10% is massive. So yeah, just going on to the equities indexes here. SPY was up a little bit yesterday. There is so much to digest today. I can't see us moving dramatically. BHP, I think, got hit about 4% on the US ADR. That'll obviously be in focus. Everyone will be talking about copper, but in reality, BHP didn't have a US copper operation anyway. So this actually broadly probably benefits BHP in the long term, because shipping the concentrate now is not subject, isn't as subject to tariffs as what it was before. It's more focused on that finished and refined. So really benefits the South American mines, which BHP owns like the lion's share of. So there'll be a bit of a knee-jerk reaction. Rio did have earnings overnight. It was played out in the press as an absolutely horrible earnings. I haven't gone into too much detail this morning as yet, but yeah, I think I think that will be there'll be some initial panic from BHP, and then and more than likely it'll be a bit of a buying opportunity, I guess, overall. But Rio's ADR on the US market was down about 4%. And that obviously would have included the copper move as well. So the earnings couldn't have been that bad, I wouldn't have thought, and probably been largely in line with expectations. So it's pretty hard to get divvies in Australia these days. So the banks are way too high. So it could be some good long-term opportunities there. Asia was down yesterday. Wasn't really much news behind that. I think it was just a general breather. The Dow was down a bit. The S&P and Nasdaq were largely flat. The small caps got hit a small amount. They've had a bit of a poor week, but obviously the focus is on the Mag 7 this week, and the Mag 7 are knocking it out of the park. Small caps, how good those mega cap companies are performing is giving very little reason for large sovereign wealth managers, fund managers, and just general investors any reason to come out of the Mag 7, to be honest. So that really hurts the small end of the market because it sucks up a lot of flow. I mean, we're talking trillions and trillions and trillions of dollars here. So yeah, I have adjusted the market map here this morning to include in my superb graphic design skills here the aftermarket move for Meta and Microsoft. So Microsoft was up about 7, Meta was up about 10. Obviously, you can see here, Nvidia. This was before the close, but I'm assuming Nvidia would have rallied after the close. They're going to be a major beneficiary of this cloud growth, etc. And Broadcom there as well. That's semiconductors. So these squares are based on market cap. And truth be told, all I can see is this large half on the left-hand side here is just going to keep growing and growing and growing in the coming years, given they are starting to monetize that AI. So I really haven't had a huge amount of time to go into super detail, so I might come back to this tomorrow. But Microsoft actually gave, for the first time ever, a very specific number on Azure. Intelligent Cloud as well. So getting a lot more specific in terms of their revenue numbers for that Azure, which is their cloud services business. And that, I mean, that's just obviously a sign of the times, essentially. And look, 41% operating margin. Microsoft 365 and LinkedIn. Look, there's an element of socials there, which does help them in terms of data. I actually forgot they bought LinkedIn. I'm not a massive fan myself, but yeah, there's good margins there. Margins increased. Personal computing. Look, I mean, it's a bit of a side project, really, but revenue in total, as you can see, from those three business lines comes in at 76.4 billion, up 18% year on year. Gross profit margin, 69% margin, slight improvement as well, but that's fantastic margin. Operating profit, 45% margin, up 2 basis points year on year as well. And look, net profit, just outstanding. And one of the facts that I was reading an article this morning is the likes of Apple, Microsoft, Meta, all these Mag 7 companies, the big, beautiful bill significantly helps them from a tax point of view. So these R&D numbers, that expenditure, the tax credits they can get from this big, beautiful bill will reduce that over. Well, it won't reduce the expenditure. It'll just subsidise it, essentially. Poor old Elon in the crosshairs, but, anything to do with AI and they're actually going to start benefiting. So it'll increase the company's free cash flow, which enables them to give. Americans don't really do dividends; they tend to do more buybacks, and it gives the Mag 7 more capacity to do more buybacks, which is obviously reduces the amount of shares, increases the share price. It's a way of delivering. In Australia, we tend to give dividends, a bit more of a dividend market because we like franking as well. But in the US, it's sort of almost seen as a bit of a sign of weakness that you can't do anything. You haven't got any fresh ideas to do with the cash. Although you wouldn't know it if you looked at Apple. They haven't done anything new for about 10 years. But so here we go with Meta, and look, AI, but in a different form, in a different way. I mean, these guys have the data. They've got everyone's got Facebook, WhatsApp, Instagram, Facebook Messenger. They have an open source, which means similar to what Android is. For Samsung phones, they provide the open source platform for developers to use and develop on. They're not closed like the Apple platform's a closed ecosystem. So that hasn't gone particularly well, but I think that will definitely benefit them in the long term. But they know from anyone who's got Facebook or whatever. They're listening in. You talk about something, and all of a sudden the ads come up, etc., etc. Like it probably knows more about us than we know about ourselves, and that is obviously massively valuable in the AI and personalization era. So, and they're looking at the glasses as well, which I see as a potential long-term threat to mobile phone devices, which would be a catastrophic threat to Apple, given they haven't had any new products for nearly 15 years. But those things are a little bit further off. But again, not quite as impressive as Microsoft there, but still nearly a 40% margin increasing, operating expenses, R&D. They've just thrown the kitchen sink at AI with R&D. That'll improve with the big, beautiful bill as well. So that cost will just come back down. And, they're fairly lean operation, really, if you have a look at the broader scope of things. And as much as Meta's got a little bit of the same problem as Tesla, not the most likable CEO, but he tends to be a bit of an innovator. It's probably similar to Jack Dorsey at Block as well. I think he's probably a little bit too forward-looking in terms of his communication to shareholders. I think shareholders want to know more about what's coming up in the next year, not what's happening in 3. I dare say that would be the case with all history's sort of fairly brilliant and innovative people. Everyone would have thought they were a touch crazy or didn't quite understand until things played out into the future. So Meta's really a data play. So pretty impressive numbers there from them as well. Tomorrow we've got Apple and Amazon. Amazon's already rallied 2% in the aftermarket on the back of Azure. So Azure Cloud, Amazon's AWS is actually the major competitor to Azure. It's the biggest cloud and data center provider in the world, I believe, and that's where Amazon makes most of its money. It's really juicy, high margin profits from. It's not really the online store. Again, almost like Microsoft owns LinkedIn, gets people's data. Amazon has Amazon Prime, which obviously gets people's data as well. Meta has Facebook, etc. So it's all about knowing your customer, being able to then leverage that to advertise to them, etc. And then they've all been heavily invested in these cloud services for a number of years. So a lot of positivity going into Amazon's result tomorrow. I've already seen a number of news stories. So is Amazon going to pop tomorrow? Sometimes there can be the counter effect, though, and this is a bit of a warning for people who just want to jump in, is that sometimes when Azure does well, it's actually eating AWS's lunch. So there has been a number of occasions in earnings in the past where that has actually been the wrong move, because it just means that Microsoft's doing a better job and they've taken customers from Amazon. So I believe this time around, it's not that case. I think it's a broad investment from companies globally, and I think it'll be a rising tide floats all boats sort of scenario. However, in just to flag that, it's not always just follow the leader there. Apple, look, I'm not very interested in Apple. I think the company is just an aging dinosaur, basically. And I firmly believe that sometime in the next 5 years, if they don't get their butts into gear in terms of like getting involved in the AI revolution, or spending some of that enormous cash pile that they have, which is in the hundreds of billions of dollars, and get their head in the game, they're one mobile device jump in technology away from having a BlackBerry moment or a Nokia moment, because and people laugh at me when I say that, but all they've brought to you is better processors and an improved camera for nearly 15 years straight, and the Samsung interface is really, Samsung interface is really now they're so similar. People migrating is not a big issue. Apple actually even closed their stores in China, or they announced they're closing their stores in China They're sort of flagship stores as well. So yeah, I am probably largely never going to be very bullish on Apple unless they start to spend some of that cash. Probably not, they look great first mover advantage, but it was 15 years ago. And technology moves fast. If they don't spend it, they should deliver it back to the shareholders, in my opinion, because that sitting on that cash pile is a massive risk overall. And not to say this is going to happen in the next 2 or 3 years, but you look at the developments that Meta's made with those glasses, etc., where essentially you could almost have a mobile phone and a head-up display sit in a pair of sunglasses or spectacle glasses, or optical glasses for then if all of a sudden glasses can be your phone, that's really going to hurt Apple, because 55% of their revenue is iPhones, and then all the things they sell on from that in terms of their platform. So we will have Bank of Japan meeting today, core PCE, and then employment tomorrow night. And then I've just got the new calendar for next week there. Palantir will be interesting. That's the US government's AI of choice. It's been on an absolute tear. I think it's up a couple of 100% this year. Berkshire will be over the weekend. AMD will be interesting next week. Pfizer, judging by yesterday, probably, I'd be trimming into those results. Caterpillar, which is often regarded as the economic bellwether, because that's the heavy machinery. Those results would be fairly interesting, and a couple of names you would know there, but not necessarily the largest companies around. So yeah, and then Nvidia won't be until mid to late month, which will be, but that'll wrap up the Mag 7 overall. So we're sort of heading into those smaller names now. I wouldn't say earnings season's over once these guys are done, but it certainly becomes a lot more stock specific in terms of earnings. The S&P in the aftermarket has, the Nasdaq's rallied nearly 1%, and the S&P futures have rallied 0.3%. That'll be on the back of Microsoft and Meta earnings there as well. So apologies for the length this morning, but a lot to digest, obviously. And tomorrow it'll be probably not as big, but big focus on Apple and Amazon tomorrow, leading into the weekend. Have a great day, and we will speak tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.